Hi, hello, very good evening. This is your Dhanush. Welcome to this knowledge session. So in this video, my background is completely different. So what I've been doing, because of that, just I've been in outside. So I thought to upload this video on urgent basis to reach my clients. So what is that an urgent basis? I'm going to give this information is here called. Is it your portfolio dragging because of IT stocks? If yes, watch this video till end. I'm going to give a solution for that. Okay, let's come to this topic. So here we're going to discuss a few things about IT stocks. So how much it has gone up, how much it has fallen, so how much is going to fall further. Okay, so only one sector everybody would like to hold their in portfolio, long-term portfolio, that is called IT sectors. Okay, everybody would like, definitely you've been watching this video, definitely you also been holding this video. So the stocks has almost sold $500 million for this month. So completely heavy selling pressure is coming out on this IT sectors. So the stock has index itself, IT index, it has fallen 32% from this 52-week high. If you compare from last 2 years, since the 46% up Nifty IT from last 2 years. Okay, there are big rally in this, particularly in IT sectors. How much it has rallied? Okay, let's see. So in Infosys, this almost it has rallied almost 230% post COVID. From there it has fallen 30%. When it comes to this TCS, it has gone up 142%, but it has fallen only 26% from the 52-week high. I mean, since from this peak. Then Wipro almost up by 33%, I mean 303%, but it has fallen 46%. This is the one stock is heavily fallen in large cap. When it comes to this HCL, almost it has gone up post COVID 250%. From there it has fallen 35%. From Tech Mahindra 240% it went up. Again it has fallen 43%. There are a few reasons the stocks has went up post COVID. The mainly two reasons just I could like to mention here is post COVID only the one sectors can visible earning visible. Because of that only this company IT sectors have this very scope for this earning visible, so that it has went up drastically from this after COVID. And then by the time, so there was no any interest rate hike in US, and also that also supported this for this earning purpose. From there decline from the peak. So now we will be an almost under the recession period for IT stocks. Okay, so let's see what are the some few points has drastically dragging for IT stocks. So one is in US interest rate, back to back they have been raising the interest rate from last consistently from three meetings. So further again one more indication given, so further two more I could be going to increase. Okay, again it going to be impact for this earnings. Again this is a margin pressure for this IT stocks. So for this whatever this earning for the profit margin is now is trading below this pre-COVID level. Okay, so one more thing is US recession. So we already everybody knows US in that recession due to some inflation, heavy inflation. They're not able to control their inflation. So and then a few fear on this top line. So now again US under recession, then how come we'll perform? So definitely there going to be some impact on this top line. If you see Accenture has declared this good result, I mean top line also has some pressure on this. So let's see now some valuation perspective. So a valuation in the sense what we take usually P ratio. P ratio, this what we understand from this P ratio is the stock is trading in an undervalue or overvalue. For that too we'll identify the P ratio. Let's see how much was the P before COVID, how much was the P and after COVID, then how much is the current P ratio. We can understand this from Infosys. Pre-COVID PE was almost 18%, 18 times. So now high it has went to 32. Currently it is trading 25. Still there is a gap. In the sense, what is that indicating? Still there could be some downside in this Infosys. Not only Infosys, from all the stocks which I am going to mention. Okay, thus I have taken only few. So again I am talking about overall industry itself still under pressure. So if we come to this TCS, pre-COVID PE was around 23, wherein it is high went to almost to 35. Currently it is trading with a PE of around 27. Wipro again, hardly this PE was around 15, it has went up to double this 30. So currently this PE is trading around 19. When it comes to the small cap, mid cap, so Mindtree, which is 20 was the pre-COVID PE, it has gone up to 50. Can't imagine this, how much the stocks has rallied in by the time. So the current PE is trading around 28. There is a huge gap for this PE in this as far as the Mindtree is concerned. Okay, let's see some of the few things expecting further downside if this high P is still comparing to this pre-COVID level. So as I mentioned, pre-COVID ka level ka Infosys around 18 PE, now still is in a 25. There is still a gap, so that has to get fulfilled. So if is it so, Infosys, if expecting to reach another 25% downside because of this current PE is still in a 25. If it comes to this, I will keep this EPS remain constant. Why? Because of again this coming quarters also margin will be under pressure, net profit will be under pressure. So hence I'll be considering as a EPS remains same. Okay, if I calculate that, so expecting Infosys to fall further another 20-25%. If approximately it could be 1,000 levels. If Infosys comes to 1,000 levels, then it will going to post PE, and then it's going to match by the time. So expecting that another Infosys 25%. If we're talking about TCS, again TCS expecting another 20% downside. So approximately 2350 is expecting. If we're talking about Wipro, so I think in this very less, we can expect around 18 to 20% correction in Wipro. Approximately it could be stand around 300 levels. And then Mindtree, which is the still there is a huge gap we can expect. So almost again we can expect 28 to 30% correction in the Mindtree because of it has to come 2300 level, then only this P is going to match with this earnings. So what to do now? Still whatever I talk about this 4-5 stocks, still your Dhanush is telling it will go down another 25 to 30% of stocks. What to do now? Okay, let's say example, you have been holding this 100 shares of Infosys. You already bought in a higher levels. Okay, fine, it is there in this. Anyway, you're an investor. So now I would going to give you the best solution. If from here, if any correction comes to 10% from this current level, buy another 50 quantity. Buy another 50 quantity. If from there another after correction of 10%, still furthermore if it's going downside, then buy another 50 quantity. So we can become total first 100 quantity, again 50, again 50. So now it will become average of 200 quantity. Then the average will be very less on this. If you do anything in middle of that, then the probability of this our average would be very high. I'm very much happy from this. If any correction after 10% if is rallied, then it's well and good. If not, then a worst scenario we can have this 50 quantity average. You can do that. So that's the best solution I can going to give you this in this video. So definitely I would you would like this my video, and just please subscribe my video. Just pass it to your friends and colleagues who have been stuck with this this portfolio. So definitely this IT stocks has to be in your portfolio. Definitely is going to reward you if you give some times to this IT stocks. It is never in the past history, it is never given this any negative result if you hold for this patiently for long term. So I believe is further also is going to give some good reward also. So thank you for watching my video from long back. So thank you for signing off, Mr. Dhanush.